everyone, welcome to the Ichimoku charts.com daily analysis for the Aussie dollar US dollar FX for Wednesday, February 6, 2013. Well, a continuation of the trend to the downside today. The candle we're analysing is this very large black body candle. We've seen a very substantial sell-off in this market for today's trading. Previous day's trading, we had quite a change in sentiment in this market. We had a solid bearish breakout down below the bottom of the cloud, and we know that the cloud gives us a guide as to the trend in the market. So if we're trading up above the cloud, bullish in the long-term time frame. Within the cloud, the market's fairly neutral. Below the cloud, the market is bullish. So here we have below the cloud the market is very bearish. So now we have a market that's given us a sell signal in terms of Ichimoku charts with that bearish breakout down below the cloud. For today's trading, this very large black body represents the sellers making a substantial amount of net bearish progress, and we have had the sellers close down towards the low, with the sellers closing with very strong control of this market. We did see the sellers lose some commitment down around the 103 level. We see the shadow on the bottom and some buying coming in, and that will make that a very important level for this market for tomorrow's trading, 103. And already today, as this current candle is developing, we're seeing the market find support there. So there is potential for the market to rally off this area if we do see some strength from the buyers. But at the moment, on this candle that's finished trading, all we can see is that the sellers are in control. A very large black body candle, certainly much larger than the previous day's body when we had a breakout down below the cloud. Now, obviously, there is solid resistance overhead for this market now too, if the market does attempt to rally around this 103.77 level. And we can see here that the market tested to that level fairly recently and was rejected from that level, and it held a support. So if we do see the market attempt to rally, that will be fairly strong resistance. Now, in terms of the Fibonacci extension, and we're examining the relationship of the first time frame downtrend to the previous time the market was trending down, and we have an objective here down around the 100% level at 102.81. We saw the market trade very bearishly through 61.8% and closed today down below the 78.6%, which is one of the lesser levels, a minor level, but still can be important to our trading. But combined with our reading of the short-term dynamics here, supply and demand, the sellers are in control. We don't see too much strength from the buyers at the moment, and this does suggest that there is a possibility of the market probing down below that support level that we found at the below of today's trading and testing down to the 100% level. And if we do see the market trade down around there, if we see buyers come in, it could be a good clue that the next day's trading could be a change of trend to the upside, but no sign of that happening at the moment. In terms of the Fibonacci retracement, we have a fairly different scenario here, and we're examining the relationship of the first time frame downtrend to the previous time the market was trending up. And we've seen the market prior to today test to the 100% level on 1, 2, 3 of the past 4 occasions in over the past week or so, and 103.83 was holding as very, very solid support. If we look at this candle prior to today's trading, another bearish candle and a breakout down below the cloud, and that did suggest that the market was going to trade through that 100% level. And today we've seen the market trade down and close through the 161.8%. Now that does suggest that this market may be destined for lower levels, and if we don't see that 103 level and that other Fibonacci ratio hold, then our next level support based on these ratios and this swing low here is at the 261.8% level at 102.36. So if we see continued bearishness trading through important levels, we could quickly see the market trading down there. Now, in terms of Ichimoku, I've already mentioned the bearish breakout for yesterday's trading, a sell signal with Ichimoku charts down below the cloud, giving us a bearish market in the long-term time frame. But the market now is also trading down below the Kijun-sen and the Tenkan-sen. We have been for some time, so bearish in the medium and fast-term time frames as well. And if we look at the slope of both of these indicators, and forget this small part on the end because that candle hasn't finished trading, but the slope of that is very steep, and that's reflecting very, very solid downside momentum very strong momentum from the sellers in this market now in both the medium and the fast term time frames. Now if we do see this market rally, the strength of the downside momentum in the Tenkan-sen actually strengthens that area as an area of resistance now, and that's usually the first area where the market finds resistance. If we look here at around here, this area, when we had this rally, we found resistance there, and for the candle prior to today's trading, the market traded just to the Tenkan-sen and found resistance there. So that strengthens the area around this 103.77 to 104 area as a very strong resistance. So moving forward, we have a bearish market in all three time frames. Really, the 103 area here is crucial to this market. If we see solid bearishness down below today's low and below that Fibonacci ratio we've identified, we could quickly see the market testing down to around the 1024 level roughly, and then even down to the 102 or 102.40 level, and then the 102.18 level.